All right, welcome back into Market Day Report. I'm Scott Shellady, otherwise known as the Cow Guy. Thank you very much for tuning us in. Let's get through these prices so you know what these markets are doing, because these markets, well, they're your money. Let's take a look and see what we've got going on in corn. It was having a better day, 5 to 6 cents better, and we're 5 to 6 cents better still, I'll call that. July is up 4 3/4 cents to 4.59. That's a penny and a half off the high of the day. And we've got a 7-cent range. So we're a penny and a half off the high of a 7-cent range. We'll take it, won't we? Dees trying to make its way up to that $5 mark. We're at 4.74 3/4. That's up 6 cents on the day, and that's 2 cents off of the high of the day, or roughly. And we've had, again, about an 8-cent range, 8 1/4 cent range. So not bad. That's corn. Let's take a look and see what beans have got for us. 7 3/4 cents better there, and that July contract, 11.85. This has added a couple cents to its tally over the last 15 to 20 minutes. 11.85 is last, and we're a penny and 3/4 off of that right now. We've had about a 15 3/4, almost 16-cent range. Go out to the Novi new crop, trying to make its way up to $12. 7.5 cents better there. 11.54 3/4 is last. It's a penny and 1/4 off the high of the day. And again, we also had about a 12.5 cent range over there. That's soybeans. Wheat in Chicago wheat. That's up 7 3/4 cents in July to 6.24 3/4. A penny and 1/4 off the high there, and that's working on about a 13, 14 cent range, 13.5 actually. If we move out to, say, the D, sets up 5 3/4 cents to 6.66, and again, that's just 3/4 cent off the high of the day there. Let's go from Chicago to Kansas City, see what the hard reds got for us. We're a penny better in July. 6.38 1/4 is last out there, and that's 2 cents off the high of the day. We've had about an 11-cent range, so 2 cents off the high of an 11-cent range. That kind of gives you a good picture of what's happening. We're a half-cent better in the Dees. That's the Dees hard red wheat, and that's 6.71 That's the price. Okay, moving out to the spring wheat in Minneapolis. That's 3 3/4 cents better in July. 6.72 is last, 3 3/4 cents off the high of the day. We've had a 10-cent range. That'll explain it all. Dees is up a penny and 1/4. Trying to put a 7 handle on it. 6.99 right now is last. We're 4 cents off the low of the day, and we're 5.5 cents off the high of the day. And then moving out to the cotton, just cannot seem to get anything going. 11 points lower there to 71.63 in July. 8 points lower in the Dees to 71.57. Let's bring him in, the venerable Ted Seifried, Zaner Ag Hedge in Chicago. All right, Ted, thanks for being on. What do you got for us? What are your thoughts?
You know, it's nice to see the strength after what I'm going to say wasn't a terribly bullish USDA WASDE report that we saw yesterday. In fact, the domestic corn carryover numbers, really all the numbers came in slightly bigger than expectations. So here we are, we're higher. And I think a lot of that is, the weather, this, hot and dry pattern that we're talking about, potential ridging pattern, whether that's going to stick around or not. There's risk at this time of year, right? So we're just accustomed to look at that forecast and be a bit skeptical and add weather premium. So we're doing that. And in the meantime, we keep getting these daily flash sales for beans and old crop beans, which it's a strange time of year to be seeing that. Now, they're not huge numbers. Don't get me wrong. And if you look at the weekly export sales numbers, they're not really impressive. And the big concern there has to be the fact that we're not getting any new crop beans sold. And with some hot and dry conditions in China, you would think that they'd be coming in and buying new crop beans pretty aggressively, and they're not. So there is this underlying concern. But for right now, the market seems to be focusing on these old crop cash sales, albeit, fairly small, and the fact that there is weather risk. So we're higher today. Whether we'll hold on to it or not, I'm curious to see. And then really the last thing, because it's been a theme of what I've been talking about for the last couple of weeks, is that, this isn't strong bull spreading today. This is not a strong old crop versus new crop day. In corn, it's actually bear spreading. In soybeans, it's pretty much neutral. So again, I'm a little skeptical of the strength that we're seeing today. Whether we close higher or not, I don't know. But, over time, I just don't know if the fundamentals are all that bullish. And again, it's a weather market, so we'll see. We'll forecast. But a little hot and dry might not be terrible, especially, beans like to get roughed up a little bit in June.
Well, I mean, and you're right. I think I feel like you do. It's taken all the bad news. There's no new bad news out there, right? So
Yeah.
Now that all the bad news is out there, it's just no sellers. And so if there's no sellers, it doesn't take more than a couple buyers to kind of be in charge here. And I think that's how it's happening. And we'll see. You're right. It's a weather market. I can't believe we still, after I've been doing this for 37 years, get surprised with hot weather in July, but I guess we do. And here we go. So stay right there. We need to go away. We're going to pay some bills. We're going to come back and talk more livestock with Ted Seifried, Zaner Ag Hedge in Chicago right after this. All right, welcome back. Let's talk about some livestock, right? I can't wear this jacket and not do that. Let's bring up a live cattle board and see what we've got going on. We've added to our losses since we were last visiting. August is now down $1.25 to 177.07. And that's going to be 22 cents off the low of the day there. That's no bueno. We're $1.30 lower in October to 179.75, and that too is about 15 cents off of its lows. All right, so we're getting a little weaker in live cattle. Let's see about the feeder cattle. They've added another dollar to their losses here too. So we've got an August board down $2.62 to 254.95, 60 cents off the low of the day there. And we're working on a $4 range, so that's legit, okay? So this is a legit sell-off here. November's down $2.60 to 256 even, 50 cents off the low there. And again, we've got about a $3.50 range as well. So let's move out to see what lean hogs have got this for us, and that's just steady to a little bit worse here. Nothing going on. July's down 15 cents to 93.55. Even October is down 17 cents to 76.87. Let's bring in, back in, Ted Seifried, Zaner Ag Hedge. Ted, thanks for sticking around. Anything jump out at you there? Just kind of trading some weakness. I don't know if there's been a headline, but it seems like they don't like it today.
Yeah, don't look now, and I know this is going to sound silly, but August hogs only being down just a little bit might be a big win. It has been an absolute just sell-off in the hogs. We had gotten down to under 15% in the relative strength index, which, I know not everybody looks at those sorts of things, but that is an extreme case of being oversold, not just in a hog market, but really in any market. You very rarely get to those levels of being oversold in a market. So maybe we're trying to find a little bit of a near-term bottom here in hogs, Scott. I don't know. I hesitate to say that because every time we've tried to say that in the last month and a half, it has not been the case. So we'll see. Would like to see a higher close in hogs today. As far as cattle are concerned, feeders, man, the last 2 days have been very disappointing. Part of that is for the strength in corn. But also, as we've talked about a couple of times, I think we've kind of defined a range in feeder cattle. I don't see a really good reason for an extended move to the downside, but I'm also not really feeling like we need to go sharply higher here. So, you're going to take like the 2 days that we were higher, Friday and Monday, then we've kind of given some of that back, and we're sort of all over the place for the cattle right now, but within a larger range. The chart that looks a little bit more concerning is the live cattle. But there too, I think domestic demand is going to stay really fairly strong.
Right.
Again, election year, everybody feels good about the economy at the moment. So, yeah, I really am not thinking we're going to get this big break to the downside, but the last couple of days have been disappointing.
Great stuff as usual. Really appreciate you coming on. Thank you very much. Ted Seifried, Zaner Ag Hedge, coming to us from Chicago. Bring it back here to Nashville and hand it back over to Suzanne again.
Thank you so much, Scott.